The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone. Sorry for the technical delay there. Christopher Cahill, 12 Points Wealth Management, Principal in the Family Office Services Group. I have with me Brad Kudelski. Brad, are you there?
Hey, Chris, I'm here. Can you hear me?
Yeah, I got you. Great. Sorry about that, Brad.
Hello.
So wonderful. We're going to just get rolling here, people. We have a good amount of material to cover. We want to do it in as efficient as a time as possible for you. We appreciate you spending your lunch hour with us. We're going to be talking about life insurance and disability insurance. This is who I am, as I said, in charge of the Christopher Cahill, in charge of the Family Office Services practice here at 12 Points. I'm an attorney myself, no longer practicing, certified financial planner, chartered advisor in philanthropy. I work with wealthy individuals, and I'm really pleased to have Brad Kudelski with us today. Brad and I have worked together for years. He handles a lot of the underwriting for myself and our clients. And Brad, why don't you spend a quick second telling everybody who you are?
Yeah, so my name's Brad Kudelski, and it's now been probably close to, I think we're 20 years now. I see it says 15 years on here, but mostly focused just on life, disability, and long-term care insurance. Background, went to school for accounting and somehow got sucked into this wonderful world of insurance that I haven't been able to weave myself out of, but I have a real passion for it. So thanks, Chris.
No problem. And we're really excited to have you here with us today. Brad is a true expert in helping me design and place and underwrite life and disability coverage. Long-term care as well. We couldn't cover that today. Well, that'll be a separate topic. So as we pivot here, life insurance is a contract between the individual and the company to provide coverage based upon set parameter. It is a contract, so it's a legal agreement. There's different types of insurance. We're going to spend a quick second talking about that. Brad, why don't you tell us about the different flavors of life insurance, if you could?
Yeah, so flavors is a good word because it's really kind of like ice cream. You got vanilla, chocolate, strawberry, and a little bit of everything. So term insurance is really that pure income protection that we think of and that most people utilize, because what that's doing is that's protecting your income. It's for a set period of time, maybe 10, 20, 30 years. And really that's designed for that maximum income protection to protect your family should something happen to you. And then we start getting into those flavors of permanent insurance. And that permanent insurance can be a difference of universal life, variable universal life, whole life insurance. And again, being different flavors, whole life is more of that pure vanilla. You're going to pay a larger premium, pay that premium each and every year, but that policy is going to last your entire life. But similar, you'll hear a comparison of renting versus owning a home. Whole life is more of owning that home. So you're going to pay a bigger premium. You're going to always own that contract, and you're going to have some cash value associated with that contract. And that last part there, the cash value associated with the contract, is where these things kind of differentiate themselves between whole life, universal life, and variable universal life. So whole life is really a component of a mutual company that we see, and you're having participation in what that company's profits are, and that's how that extra cash is invested, is in what the company profits are. When we look at universal life, we are investing into a bond fund with the insurance company, alongside of the insurance company. When we get into variable universal life, we're more talking about, we're going to take that extra cash that's set aside, and now we're going to put it into different investment vehicles, or what we refer to as separate accounts inside that insurance policy. So again, when you look at the premiums between these, term insurance is going to be a pure cost type of product, whereas these other ones are going to have that cash value component, and then it's how that cash value component's treated, whether it's just invested in the company's general account or inside separate accounts mimicking those of mutual funds.
Perfect, thanks. And let's spend a second talking about why people typically buy life insurance. These are a couple of the options here, but let's dive into them.
Yeah, I mean, I'd say for 95% of the people we're talking to, it's for income replacement. if something were to happen to me, I'm bringing in X amount of dollars each month into my family budget. And if something were to happen to me, what does my wife still need of my income and for how long? That's income replacement.
Mhm.
Debt repayment, just like it looks, is covering things like mortgages, colleges. If something were to happen to me, do I want to have funds set aside for my children's college? Do I want to take care of certain debts that I've incurred over my lifetime? Um, when we talk about funding a specific event, that's typically when we start looking into more permanent policies. And really where we see that a lot is in mixed families, meaning I'm on a second marriage and my wife is on, we're both remarried and we have kids from other spouses, from prior spouses. And I want to make sure that they are taken care of, meaning my children from my previous marriage are taken care of through life insurance, and we're funding that specific event. So we're trying to figure out what that is. Or when we look into the more affluent, we're talking about taxes, and those can be in the form of what we refer to as IRD taxes. So those taxes that are incurred as a result from a retirement plan, or we're talking estate taxes, those taxes that are due upon our passing that are owed to Uncle Sam. Burial expenses being the last one. Some people are just, I'm going to have that income protection that's going to protect my family and protect my spouse for so many years. But the one thing that I know that's constant is I am going to pass away at some point in my life, and there are going to be costs at those point. And let's figure out what those burial type of expenses are. And it's not just what those funeral expenses are. Again, a lot of it has to do with taxes, retirement asset taxes. The government's going to want, they got rid of that, spreading those payments over a
Yeah,
spouse's
the
lifetime.
stretch IRA.
Yeah.
Yep.
Yeah, so we've lost that stretch IRA. So now we got to come up, my wife has to now come up with money to pay those taxes.
Sure. And this is like, these are the real basic reasons why people buy insurance. There's obviously more complex reasons as well. Many, as Brad indicated, many of the more affluent clients are using life insurance to protect against the impact of estate taxes, provide certainty of movement of assets to the generations. And then at the same time, there's a lot of business needs for insurance and uses, right? So you have buy-sell agreements between partners and business shareholders. You can have key man insurance, key person insurance to protect against the loss of a valued employee. Can be tied into retirement plans and stay bonuses for executives, etc. So it's a little bit beyond the scope here today to get into the specifics of all of that. But there's a lot of benefits to life insurance, and one of the biggest benefits is really the tax advantages. So the reality is that the insurance lobby is one of the most effective lobbies in the United States, and they've done a really wonderful job of putting a wall around their business with legislation at the federal level to protect and ensure that insurance is a tax advantage investment and product typically. So what do I mean by that? Death benefit. The death benefit from a life insurance policy comes in income tax and capital gains tax free, which is excellent when you consider that there's all of this talk about removing what's called the step up in basis in death. And what happens now with an asset is if you have a capital gain of $500,000, if you were to sell it today during your lifetime, you'd pay long-term capital gains rates on it, or short depending upon that time period. But if you die, the basis steps up to the current value, and your heirs don't pay tax. That's wonderful, but the reality is that that's an artificial regulation, and and there's a lot of talk in Congress now and amongst practitioners about the desire to remove that step up in basis, in which point you'd have that $500,000 gain would be paid by the heirs. That's a bad result. Life insurance by legislation is income and capital gains tax free, as I said. So that's a good benefit now, potentially a better benefit in the future. We have cash value in the policies, as Brad was talking about, and that's just the accumulation of excess premium in one way or another. And in these permanent policies, that's where the cash value accumulates, it grows tax deferred. So there's a real benefit to that. That's what we refer to in the industry as the inside buildup. And that is really, really beneficial for people that are looking to maximize assets into retirement. For retirement planning purposes, we always want our clients to maximize their available retirement plans, their 401ks, IRAs, etc. But know that if you were looking to subsidize retirement in the future, you could use a permanent insurance policy to offset and help there. The withdrawals coming from those cash values are tax-free up to basis, which is wonderful. And then after the basis, you can take loans that are tax-free. So you can really access the cash value in retirement as a supplement, which is cool. But you really want to make sure that that you're paying attention to the loans in the future and staying on top of those. So let's talk about cost, Brad. It's surprising to many people that in a apples to apples comparison, a 55-year-old male and a 55-year-old female, who's going to be cheaper to insure?
That would be the male. Females tend to.
Oh, wait, we're talking life insurance. So cheaper to insure. Life insurance would be the female, yes?
Cheaper would be a female.
Okay, the roles are completely different in the world of long-term care and in disability, certainly. But yeah, so let's talk about the costs affecting life insurance here.
Yeah, so gender is going to play a major role, as well as health. And that's, especially in this post-COVID environment, what we run into a lot of is people really taking a look at what their health picture is. And there's certain ailments that we see most common in people: depression, anxiety, high blood pressure, high cholesterol, heart issues, sleep apnea.
And let's talk about our favorite topic these days, sleep apnea, right? How many clients have we had that come to us a bit overweight or have a condition and they're diagnosed with sleep apnea and they just, for whatever reason, decide that they don't want to use the quote machine. So really amazing how that's, we're in that.
Yeah, it's really kind of stereotypical too, because it often gets triggered by a spouse complaining of the other spouse snoring. Mm-hmm. And that's where these things start to arise, because immediately a doctor is going to say, well, let's go get a sleep study and let's take a look at things. And what happens is people more often than not will say, I don't think it's that big of a deal and I don't want to do the sleep study. Well, guess what? It's now in those medical records, and it's something it's a hurdle we have to overcome.
Absolutely. Absolutely. So, you know, we see all manner of people with varying degrees of age, health issues. We do our best to provide the best consulting and work on that. But the reality is some carriers are more accepting of risks than others. So, for instance, we were talking the other day about a client of mine that, for whatever reason, hasn't smoked in years, and went to a Red Sox game 3 years ago, and the night before the Red Sox game, he decided to chew chewing tobacco with his buddies. They were sitting there and they had a dip. Well, that shot his nicotine levels through the roof, and he's now, quote, a smoker from insurance purposes. Really crazy. And, you know, these are sorts of things that we need to know about, because there are certain carriers that are more accepting of that than others. Some carriers are better with heart issues or with family histories on cancer or whatever. So the more open we can.
Sorry about that. I was going to interject with another kind of thing along that route that we're running into a lot these days is diabetes. We see a lot of diagnoses of type 2 diabetes, and there are only a few carriers that are very open to type 2 diabetes where they can still qualify for those preferred health discounts.
No, that's a great point. Great point. So, there's certain needs for insurance that, we've talked about. Obviously, young families, there's people get married, they have kids. That's when they're typically will turn their minds to life insurance. Maturing families, they're going to start thinking about securing wealth transfer down to the children or grandchildren, as the case may be. There's estate taxes. There's all manner of things that we discussed a moment ago. But, we're going to get over here to the most important thing. If you have an insurance policy, what's the best course of paying attention to it, Brad? Do you just simply buy it and throw it in the file cabinet? How do you like to review these things?
Yeah, so with term insurance, not only are we really just taking a look at what the policy details are, and when you purchase it, usually you're not going to be able to replace that term policy after a number of years. But where we do see opportunity with the term policies most likely is health has changed. Maybe when you first took out that policy, you were a little bit heavier than you are now. Could be the opposite way as well with COVID. But those are sometimes the things that we're looking at, is to see if we can get a better rating on the policy that you currently have. When we get more into the permanent insurance policies that we talked about earlier, like whole life and universal life and variable universal life, you really got to look at that more often. That those type of policies are a real true asset that people have.
Mm-hmm.
And just like any other asset, your investment accounts, it's something that should be reviewed every couple of years to just monitor performance. Sometimes what you'll hear is older people that had purchased these contracts say, hey, I've had that policy for the last 20 years and, it just really hasn't performed that well. And now they're looking for all this money. Well, that risk could have been mitigated by taking a review of that more frequently.
Absolutely. And, what ways to deal with that? So this slide here talks about a failing policy. But, it's not necessarily failing. Maybe it's just not doing as best as it could have been, or as illustrated, which we see quite a bit. So, how do you typically address that? What do you see? What do you see as the options there?
Typically, we're just trying to figure out how we might be able to restructure it. And most often with that restructuring is adding money to that policy to help catch it back up. In regards to replacing, there could be a matter of replacing it, and where I'd say we've been seeing that a lot the past couple of years is people with current loans on their policies. So for whatever reason, people might have come into hard times, or an opportunity might have come up and they've taken a loan from that policy, or they were using it for income to offset some things. But now with what's happened internally into that contract, because these policies were bought some years ago, is they have high interest rates associated with those loan rates. And there's several companies that allow us to replace that and basically shop that loan rate with another carrier and what we refer to as refinancing that loan through another insurance company. The last option is you can, again, these permanent type policies, they're assets. We can always surrender or sell that policy. So we can either take the cash that's in there, or we could sell it off into the secondary market, and investors will buy these policies knowing in exchange they're going to get a death benefit later down the road when you pass away. Those opportunities, as great as they are, it's kind of a last resort, with those permanent policies and people that are older. The go-to, I'd say, is look at friends and family members, really. See if anyone else, because there is real value to those policies. You might have a wealthy child. Maybe they could continue to pay those premiums.
And it's a little less ghoulish, right? Some people are nervous about having a stranger on a policy on them. So,
right.
Perfect. Well, thank you for that. And we're going to pivot here. And, one of the most important questions that we ask our clients is, what is your greatest asset? And, the real answer to that is your ability to work and earn an income, right? So the reality is that this is one of the most overlooked aspects of financial planning and wealth management for a whole host of clientele. Americans in general are underinsured from a perspective of protecting their income. Here we say, what's before you answer that, what would happen if you became sick or hurt and couldn't work? Could your family survive without your income? Most likely not, unless you're independently wealthy or own a business that could run without you. Does your family have the means to cover the current debts and daily living expenses if you couldn't earn an income? Probably not. And how much disability coverage do I have, including individual or group coverage? I mean, most people are lucky if they have group policy, never mind an individual policy. So, what we really feel is that the financial consequences of a disability could be really devastating for you. And having quality income protection is critical. And the reality of this is that, if you pass away and you're not properly insured from a life perspective, all right, well, you screwed your family to some degree, potentially, but you're gone, and that's that. It's not your concern anymore, truly. But if you become disabled and you don't have appropriate coverage, it's not only your family, it's really yourself. So let's get into the specifics here about disability. Want to take us through the next couple slides here, Brad?
Yeah, sure. So, before I go too much into this, a lot of what I like to talk about with disability insurance is, and we've talked about it as an industry, maybe we should really revamp the name of this product to being just an income insurance type of product, because most people think right off the bat, disability is something catastrophic. It's me getting into a wheelchair. It's me getting some catastrophic diagnosis of multiple sclerosis, where I can no longer work and there's not much I can do. And again, I'm confined to a wheelchair, or some mental issue that's got me permanently and totally disabled. While those things are obviously something that can happen and are covered by disability insurance, I'd say what's more apt to happen and what we look at these policies more for is loss of income. So replacing that lost income. And an example I often give is, and it's something that we see more often, is cancer, stroke, heart attacks. These are issues that happen that are sometimes short-term in nature, but can lead to that long-term loss of income. An example of that could be, I'm a chief marketing officer of a company. I'm making $300,000 a year. I'm really well heeled, but I get that cancer diagnosis, and now I'm out of work and I'm taking care of myself, and I'm out for maybe 12 or 18 months, and I've now fully recovered. Well, has my company just been without a chief marketing officer that entire time? Probably not. They've probably already brought that replacement in. So now I'm healthy, and I'm finding myself without that position and without that income. However, being the kind company that they are, they still have use for me, but I'm in a different role. And instead of maybe making 300,000, I'm making 200,000. Well, the one thing to look at is I'm now fully recovered. I can do 100% of the job duties I was doing before. However, loss of income. So disability insurance, one of the riders that we see in there is for partial disability and what we refer to as a residual recovery rider, enhanced residual disability and recovery rider. And what that's going to do is it's going to make up for that loss of income until you get back earning that 300,000 that you were before. So two things are going to happen for that policy to not pay. Either you're going to get back to making the 300,000, or you're going to be at retirement age.
Huge point. Really, that's so critical to understand that, people, that the perception of disability is just, I think, by the majority of people, erroneous, and doesn't take into account the full gamut of things that can happen. And as Brad indicated before, we're in the midst of this pandemic still, and it's changed the way we think of risk and our lives. And I think that we've certainly seen a pickup in our business as it relates to both topics here today, from our clients wanting to preserve, protect assets for their children, their wives, their families, and themselves, truly, with this type of coverage. So let's talk about the duration of the disability.
Yeah, so when we look at duration, many of the claims that we see are those short-term type of claims. They could be anywhere from 2 to 3 years. When we talk about statistics, another story I'm always into storytelling, and it helps people relate to things. So a story I like to tell is, if John down the street were to pass away from a car accident, everyone on the street, you can be sure, would know about that situation and how that's impacted that family.
Mm-hmm.
But let's say James, that lives down the other end of the street, has a cancer diagnosis, and he's still kind of going to work. We might talk about that here and there, but it's not really widely talked about. And the other thing that is definitely not talked about, like, again, in the life insurance with John down the street, everyone feels bad for the family. They know that that income is now gone, but what they don't realize with James down the other end of the street is his income is also gone or diminished from what it was prior. So these conversations aren't really happening in society. It's kind of like the mental health issue. It's swept under the rug. When we talk about statistics with disability, one of the statistics I heard that's kind of kept with me over time is, in your working years, there's a 1 in 106 chance that you are going to have a premature death before retirement. However, with disability and having a loss of income, that number is now 1 in 7. So there's a 1 in 7 chance that someone or someone is going to have some sort of long-term loss of income over, a period of 2 or 3 years, if not longer.
It's really amazing, and those statistics are scary, right? The 1 in 3 chance that a working American will become disabled for more than 90 days before the age of 65. And as you indicated, you're 3 times more likely to have a disability than to pass away prematurely. So many of our clients come to us looking for life insurance, right? That's their primary point of entry on the insurance discussion. And they've not considered the importance of income protection in any way, shape, or form materially. We really feel it's important to marry these two topics together, truly. And, again, the average claim is longer than 30 months, which is really important to understand. Crested on 3 years. And the majority of bankruptcies in the United States are caused by medical problems. So you can help protect yourself against that. So let's talk about where you buy and get access disability policies, Brad.
Yeah, for many people, it's going to be through their employer. Many companies do offer some form of group disability insurance. The number, though, I've recently learned, and I can't think of the number, but I want to say it's something like 20% of companies actually offer their employees some form of group disability coverage. There's always workman's comp that you'll find in companies if you're injured on the job, and there's Social Security that you have. But where we predominantly see people relying on this type of coverage is through that employer-provided group disability plan. Kind of like what we talked about with life insurance, the biggest thing to think about and look at is, what do I have? Let's take inventory. What do I have? How does it work? And when does it pay me? And is there a gap or a limitation in that coverage that I should be cognizant of looking to cover, what's not covered by that group policy?
Yeah, well said. And that's critical. We need to know what the current coverage is, and then how we can layer on top of it as necessary. And we want to look at those group policies and make sure that they're things that you can, take with you, as the case may be, when you change job from one to another, especially in this age of the great resignation, as they say. So we've talked about the importance of income protection. This really highlights it a little bit further. Certainly one of your greatest risks, we've talked about that, 7 times more likely to be disabled than to pass away prematurely. There are caps on many group policies offered through work. Typically it's, $10,000 a month of coverage max. Can be taxable the way it's structured. So for people that are earning, over $200,000, that's likely not going to be full coverage for them. We want to make sure that you're getting the maximum after tax return and benefit, net of taxes. So there is this concept of reverse discrimination, typically not getting group coverage over 200, as we said. And you're really trying to get up to 60% of your salary covered. That is the most important thing. And then having appropriate provisions, definitions, and portability, as we talked about. So let's talk, Brett, about what the most important components of a disability policy are from your perspective.
Yeah, really, and it's, what most people come to us is, what is the definition? How am I going to make a claim on this policy? Do I have to be in a wheelchair in order to make a claim? Will the company still pay me if I can go flip a burger or teach in a school? So we want to look and understand what those definitions are and when you can make a claim. We're also looking at what income amount is being protected under that policy. When we're looking at those group policies, it's 60%. Most often than not, what we're looking at is, what is that benefit cap? Chris said it's 10,000, but depending on the size of the company, if it's a small company, you might see it as little as 4,000 or 5,000 a month.
That's right.
So to Chris's point, those high earning income individuals, they're most often, without even taking a look at what their group policy is, we can mostly presume that there's a shortfall in what their income protection plan is.
And that's certainly the case with executives, partners at law firms where we do a ton of work, physicians, professionals and executives, C-suites, etc. There's just a massive gap, and it's just so important to pay attention to.
Next, reputation. I'd actually say and feel pretty confident is, there's not a lot of disability carriers out there. When we look at life insurance, there's 30, 40 different life insurance companies that you can shop that product with. When we look at disability, there's only about 8 really good ones. Fortunately, they all have very good financials, I'd say. What really is going to differentiate those policies, and sometimes we'll have people say, well, if you have 8 carriers, why not run me a quote with all 8? Well, the reason is simple. They have different definitions of disability, and certain carriers like certain risks or certain occupations. So more often than not, you're probably only going to see 2 or maybe 3 quotes, because we're only going to hone in on those carriers that we know that have a specific skill set towards certain occupations. If you're a cosmetic surgeon, we know there's a couple carriers that are perfect for cosmetic surgeons. If you're an attorney, there's certain carriers that are specific towards attorneys that we like to take a look at. When we're looking at skills, again, here's a prime example, especially in the law firm space. Are you a litigator? Are you going to court every day? Are you speaking in front of people? We really want to make sure that that policy is covering you being able to speak in front of a judge. Because if you can't speak in front of a judge, yeah, most likely you can still be an attorney. But guess what? A litigator is going to get paid a little bit different than another attorney, doing real estate work, for instance.
Absolutely.
And high income earners, really once we start getting over that $500,000 income mark, we tend to have to go outside the traditional carriers that we work with. And we're looking at the high limit disability income space. What most people have seen, if they're in that income bracket, is Lloyd's of London marketplace. So we're looking for high limit. We tell people we can insure anyone at any income. So if you're making $1, $2, $3, $4 million a year, it doesn't really matter. We can always get up to that 65%. Most people might not insure that full 65% because really it comes down to your bandwidth for making that premium payment.
Absolutely. So let's we're coming down to the end here. Many people think that workers' comp or Social Security covers disability. Let's spend 2 seconds as to why that's really not the case.
Yeah, so in certain occupations and certain income, that might be enough for certain things. Workers' comp, that's going to be something that pays you on the job. So an illness and injury related to on the job work. Majority of claims aren't on the job, unless you are a factory worker making widgets and the machines are going up and down really fast and you may get hurt doing something like that. There's going to be a limit possibly to how much workers' compensation you receive. Social Security disability, I'd say when I first got into the business, a lot of people thought that that's what their plan was going to be, was Social Security disability. What I think most people recognize now is Social Security disability is going to give you a very small amount of benefit each and every month. And the other thing that a lot of people don't realize with Social Security disability is the claim. So it is really that wheelchair type of claim. So it's going to be a permanent and total disability lasting longer than a year before you can make a claim for Social Security disability. You might have to apply a few times before you even get that. And a story I like to share with people, and it's a very common story. It's not just one that I saw personally, but I own rental property, and I have a tenant that came to me one day and said, "Brad, I've been diagnosed with a rare form of multiple sclerosis that's very aggressive." And it was very aggressive. Within a year, she was confined to a wheelchair. And even with her confined to a wheelchair and visibly not able to do anything, she applied 3 times with the Social Security Administration before she was able to receive a claim. And then to realize that claim was only about $1,000 a month, and this was someone making 50, 60,000 a year, and $1,000 a month is not going to cut it. Here in Massachusetts, it's not even going to pay your rent.
That's for sure. So let's kind of wrap up here. We're a little bit over our allotted time typically. So, this term executive disability coverage, you want to just spend a minute talking about that, and then we can just get to the end here?
Yeah. So with executive disability coverage, we're more talking about with groups of high income earning executives, where we're going to issue a type of group well, it's going to look and feel like a group policy because we're looking at the entire group, but they're going to be individual contracts.
Mm-hmm.
Now, again, what we talked about earlier is you might have with a group policy that income cap, and that income cap 5 or 10,000 a month, because they're looking at the entire pool of employees. Well, with executive disability coverage, we're carving out that C-suite or those high income earning, and we're layering on a guaranteed issue policy, so no medical underwriting for those higher income earning executives. So instead of those executives being stuck with the 10,000 a month cap, maybe they're stuck with another 5 or 10,000 a month on top of that through this executive disability policy.
Absolutely. And I'm just going to bang through these here. I mean, this is really what we see a lot of when we're working with our clients. After reviewing their group policies, they'll either want to buy an individual policy, sometimes pooling together and doing it as a group with the executive team works best, as Brad indicated. So this is really the most important component, is to pay attention to this, to put it on your radar, and review your contracts. The same thing as we talked about with regard to life insurance. We want to make sure that we're reviewing these disability income protection products over time, because you can easily outgrow it as you continue to be successful and grow in your own career. So we've hit the 45-minute mark here. Again, thank you so much, Brad, for joining us today and lending your expertise as it relates to life and income protection insurance. This is where you can find the two of us. By all means, reach out. We'd love to speak to you. And thanks again, Brad. We'll talk soon. Have a great day, everybody.
Thank you. Pleasure as always.